All right, everyone, so welcome back to another video, and in this video I will be talking about the ICT immediate rebalance. You definitely don't want to miss out on this one. So without wasting more time, let's begin. All right, so this is everything that we will be discussing today. Don't worry, they're all maybe like a minute long each, so just relax, okay? I made sure I broke everything down to make it as simple as possible, so it's up to you what you want to skip to, but just full warning, this is everything that I have planned for us. All right, so let's move on. All right, so some of you are wondering what this concept is good for. So this concept helps traders identify high probability trend continuation patterns in the market by highlighting moments where price achieves instant balance without leaving inefficiencies or leaving fair value gaps, right? So what is the market significance of this? This reflects institutional order flow and algorithmic trading patterns, providing insight into smart money movements. Also, the trading application is this signals robust trend continuation with greater strength than many other technical patterns. So at least according to ICT, this is one of the many powerful trading patterns that you can find to assure yourself that the trend is indeed going in the direction that you think it is. So if you think it's strongly bullish, well, if you see an immediate rebalance, then the strength of that trend is going to be bullish, but with a higher probability, right? And this works vice versa. So with that being said, let's dive into the more smaller, minute details of this theory. All right, so let's start with something very basic. What is immediate rebalance? An immediate rebalance is a market condition where price achieves instant balance without leaving gaps, inefficiencies, or imbalances of any kind that would typically require future retracement to resolve. So what's the key definition? Unlike other price patterns, the immediate rebalance fills any potential price gap immediately, signaling that the market has no unfinished business and is likely to continue in the current direction with strength. The price fills any potential gap within the same time frame, achieving balance instantly, distinguishes itself from other concepts like fair value gaps, which leave inefficiencies, requiring future revisits, and lastly, it's considered one of the most powerful algorithmic price delivery signatures in ICT methodology. So nothing more to this, nothing less. All right, so core idea and market implication. The fundamental principle of an immediate rebalance is that the price fills any potential gap instantly, signaling strong continuation of the prevailing trend. Now, what's the key market insight here? When an immediate rebalance forms, it suggests that the market has no unfinished business and is poised for a significant move in the current direction without needing to revisit prior levels. So I know a lot of us will sometimes have some fair value gaps, right? And either that fair value gap will get filled after the next couple of candles or after, let's say, a day or two or even a month, right? It just depends on when price wants to come back to that level. But with immediate rebalances, you don't have any of that. And I'll show you an example in a bit. But with immediate rebalances, market reacts so quick that it instantly fills any gaps and then moves on in its intended direction. So let's talk about algorithmic signature. Considered one of the most powerful algorithmic price delivery patterns in ICT's methodology, often indicated coordinated institutional activity. So at least according to ICT, when the institutions start coming in and buying up all the stock or buying up some pips, whatever the case may be, it starts filling in price very, very quickly, and it's an indicator that says, hey, the institutional powers that be are now in play because of how quickly price has been filling in those gaps. Now, institutional order flow, this reflects smart money behavior and provides traders with a high probability signal for trend continuation backed by significant capital. All right, so let's talk about the immediate rebalance versus the fair value gap. So here you can see I have an image of a fair value gap right here, right? And this obviously requires a future fill. Price has to at some point in the future come back down and fill in this fair value gap. Now, what is the formation or the key distinctions here? It's a 3-candle pattern which creates a price gap and the gap between the wicks of first and third candles. Next, it creates an imbalance requiring future retracement to fill. And lastly, market will likely revisit this zone later, also known as a deferred rebalance. So that's really just a fancier way of calling it a fair value gap, right? At least that's according to ICT. It calls fair value gaps or regular fair value gaps like this deferred rebalance. Now for the immediate rebalance, as you can see, it's an instant fill. So similar 3-candle setup with the fair value gap. The third candle though fills the gap immediately by touching the first candle's wick. This also eliminates imbalance instantly, showing stronger trend strength. No revisit needed. This indicates a powerful continuation. Now as you can see, look at how quickly price taps into this wick. It has to tap into that wick, the first candle's wick. Okay, as long as the third candle touches that wick, that is considered an immediate rebalance. All right, it's really that simple. I'll show you a few more examples, but there's really nothing like super special to this stuff. Okay, now what is the key distinction here? The critical difference is that while both start with a similar pattern, the immediate rebalance achieves instant balance with no inefficiencies left behind, suggesting a stronger trend continuation signal compared to the fair value gap. Alright, so how does an immediate rebalance form? So the pattern formation. The pattern requires exactly 3 consecutive candles. The third candle must make contact with the first candle's wick, and this occurs within the same time frame, achieving instant balance. So as you can see here in that example that I showed earlier, the first candle's wick is right up here, right, for a bullish trend. The third candle means nothing, right? But the second candle means nothing, but the third candle, that means something. Why? Because we must see that wick immediately touch the first candle, as you can see right here, leaving no fair value gaps. And then the same thing here on a bearish trend, right? You're going down, second candle means nothing, third candle means everything. As you can see, this third candle touches that first candle's wick or bottom wick immediately. Now, critical distinction. This prevents formation of a deferred inefficiency or a regular fair value gap, right? This indicates market has no intention of revisiting that level soon. So when you see something like this and you're entering trades, or if you're in a trade and then you see something like this just gives more confidence to the setup that you're going to take or that you already took. And this shows stronger price momentum that patterns with gaps. All right, let's talk about the formation process. Now, I know this might seem a little repetitive, but trust me, it's important. So understanding how the immediate rebalance forms is crucial to recognize and validate this pattern in real-time trading conditions. So number 1, 3-candle pattern. Begins with a sequence of 3 candles similar to a fair value gap setup. The first candle establishes the reference point with its wick. Number 2, instant gap filling, the critical setup. The third candle immediately fills the potential gap by making contact with the first candle's wick within the same time frame. Number 3, no deferred inefficiency. Unlike a fair value gap, this action prevents the formation of a deferred inefficiency, meaning there's no fair value gaps in the market structure requiring future mitigation, or in other words, there's no fair value gaps to be filled in the future. Number 4, unlikely price revisit. The immediate balancing indicates that market forces have no intention of revisiting that price level soon, suggesting a probability of strong trend continuation. Now, this part right here, the confirmation required, that's more if you want to validate it with even stronger confluences. Now, this is not a must, and as far as I'm aware, I don't even think ICT himself uses this as a must, but it has been pretty good to use, at least when I've been backtesting with it. So what this is the pattern is validated. In other words, the immediate rebalance is validated by 2 extension candles following the 3-candle formation, confirming the direction and strength of the trend continuation. So I'm going to show you an example real quick. Okay, so notice how after the immediate rebalance that we have here, we have these 2 bullish candles That is what is known as the 2 candle extension, right, or the confirmation. Once you see 2 bullish candles, because we are in a bullish trend and we had a bullish immediate rebalance, that should then confirm in theory that the trend really is indeed going to be bullish. And then same thing here, right? We have a bearish immediate rebalance, and then after that we had 2 bearish candles, meaning that the price is definitely more than likely going to be bearish for the rest of the time frame that it is that you're looking at, or the trading session, right? That is what I mean by a confirmation. Okay, it's that simple. Okay, so let's talk about some real world examples. So this is the dollar index and euro dollar. So for the dollar index example here, you can see that this is like a similar example that ICT would use. So the dollar traded down to a previous day's high and immediately reversed upward. So real quick, the 3rd candle fills the gap by touching the 1st candle's wick. So this is the immediate rebalance right here. As you can see, there was no efficiency created, meaning no opportunity for inefficiency to exist. The result, a strong bullish continuation followed. And as you can see, price, when it came back and touched on the previous day's high and caused that immediate rebalance, would you see price started going bullish for the rest of that trading session. Now I'm going to be completely honest, I obviously cherry picked this example. It's not always easy to find them specifically this way, right? Trading back to a previous day high. But when you do see them, it does seem to have some sort of merit, right? Because obviously, as you can see, it tapped into that previous day's high, rejects off of it, creates that immediate rebalance, and we're off. So I would say there is something to this. Now for the euro dollar example, the euro dollar traded up to one of Monday's lows and accelerated down rapidly. So as you can see here, price tapped into this low right here, this one of this previous day's lows. So I just marked up the whole wick, and then once price traded up there, you can see there was that immediate rebalance here, and then price started going down. So again, the 3rd candle immediately filled the potential gap, and then this forms a bearish supply immediate rebalance. So that's a whole another thing, right? So it's like a supply and demand paired up with immediate rebalance, and the result was what? A strong bearish continuation. So when you see this immediate rebalance here, you also notice that it happened near this supply zone. So when you see an immediate rebalances, or any immediate rebalances near a supply or demand zone, that just makes them much more powerful, right? So as you can see, once that immediate rebalance happened, we had bearish continuation, and then what happened here, when price retraced back up, tapped into the supply zone near that immediate rebalance, and then what did price do? Kept going down. It's really that interesting. Multi-time frame application. So immediate rebalance patterns appear across all time frames, making them versatile tools for traders with different trading strategies and time horizons. So higher time frames. Daily/weekly charts show major immediate rebalances that can define the direction for weeks. Ideal for swing traders and weekly or daily bias. So if you're someone that's looking for a weekly or daily bias, you can definitely use the immediate rebalance to see where the week or the next day will be heading towards. Now, intermediate time frames. So the 4-hour, the 1-hour, and the 30-minute charts reveal swing trading opportunities, where immediate rebalances are seen as important levels the market could possibly react from. So if you're someone that's a swing trader and you're planning on scaling down a time frame to enter a trade from, and if you happen to find an immediate rebalance, you can get a pretty good entry and you can hold your trades for however long it is that you're planning on holding them for. But the point is that with an immediate rebalance, it adds an extra confluence and certainty to the trades that you're entering in. Now, lower time frames. The 15-minute, the 5-minute, and the 1-minute charts help pinpoint precise entries within the context of higher time frame bias, great for day traders. Now, if you're someone struggling to find bias for the day, I have plenty of videos that you can check out. I have tons of playlists, so just watch them all for all I care. I promise you'll have bias down in no time. All right. Now, multi-time frame analysis strategy. So first thing, use higher time frame immediate rebalances to establish directional bias. Next is look for alignment across multiple time frames for highest probability setups. Next is drop to lower time frames for precise entry after higher time frame confirmation. All right. So once you get that higher time frame confirmation, then you can drop to the lower time frame to get an even better entry, right? You want to use a higher time frame for your trend, the lower for your entry. And remember, patterns have more significance when they align with higher time frame order blocks. A little bit of foreshadowing there. All right, so now we've got pattern types. So types of immediate rebalance. We have demand immediate rebalance, and we have supply immediate rebalance. So this is what I was talking about earlier. So the initial bearish candle followed by bullish movement. This is just describing a demand zone. The third candle retraces down to touch the first candle's wick. Now this is talking about an immediate rebalance paired with a demand zone. Next is signals immediate demand zone with strong buying pressure. This indicates upward momentum will likely continue. So as you can see here, right, price swept some liquidity, we created a breakup structure. So then we come down here, we see a demand, and with that demand zone, we also have what? An immediate rebalance. And what happened here? Price tapped into that immediate rebalance near that demand zone, and look, we have a strong bullish trend continuing towards the upside. Now, same thing here for the supply immediate rebalance, right? We have an initial bullish candle followed by bearish movement. Again, this is just describing the traditional way of marking up a supply zone. But if you're wondering how or where to identify these supply zones or order blocks, I also have a video on it. Amazing video. I honestly think you should watch that before getting into this specific portion of the video here, but it's up to you. Next, third candle rises to touch the first candle's wick. Next, it signals immediate supply zone with strong selling pressure. And what does that indicate? It indicates downward momentum will likely continue. So what do we have here? We have our supply zone marked up. We have an immediate rebalance, right? Because this wick obviously is touching this one right here. But notice how it wasn't that I marked up as my supply zone, which I could have. But I only chose this example to show you the variations. The variation is that even though the immediate rebalance didn't happen by touching the supply zone like I showed you in the first example, it did happen near it. And what happened here? Price tapped into that immediate rebalance and that supply zone, and what did we see? We see a bearish trend, right? We saw a nice bearish trend. It's really that easy, guys. That simple. And remember, validation of both types. It does not require, but if you want to, it can require 2 extension candles in the direction of the trend following the immediate rebalance. But again, you don't always have to have this type of validation, but it is very, very useful. Alright, so here are some key characteristics of immediate rebalance. So first thing, instant balance. Unlike for value gaps, immediate rebalances resolve price imbalances immediately, leaving no gaps or inefficiencies that would require future filling. Next is trend strength indicator. The immediate nature suggests powerful trend continuation driven by institutional algorithmic activity, making it a high probability signal. Next is confirmation requirement. For a valid pattern confirmation, traders should look for 2 extension candles following the immediate rebalance formation. And last, context dependency. Significance amplifies when analyzed with other ICT concepts like order blocks and liquidity pools within the broader market narrative. So pairing immediate rebalances with other stuff, guys, really makes this thing even more powerful. Now, trading insight. An immediate rebalance without the 2 extension candles can be considered a failed pattern that may signal potential trend weakness. But again, guys, this is not an absolute, all right? We don't always operate in absolutes when trading. This is just a suggestion more than anything, okay? All right, so trade continuation. The immediate rebalance provides one of the strongest trend continuation signals in ICT's teachings, offering high probability trade opportunities. So, an implementation strategy. Enter trades in the direction of the immediate rebalance. Bullish for demand IR, IR just means immediate rebalance. Bearish for supply IR. Wait for 2 candles to confirm the pattern's validity before entry. And then the next thing you do is target the significant level, a liquidity pool, an order block, or just a future breakup structure. Next is the optimal timing. High volume London or New York sessions for stronger momentum. Have silver bullet hours, which would be 10 to 11 a.m. or 2 to 3 p.m. New York time, when algorithmic activity aligns. And lastly, focus on major pairs with higher institutional participation. A quick Google search will tell you what some pairs like this would look like, but you don't have to necessarily use those pairs only. It's up to you and your back testing data. All right. Now, just a quick real example would be on the dollar index. A bullish immediate rebalance prompted traders to anticipate further upside to the 1040.54, aligning with the weekly trend and completing a successful trend continuation trade with minimal drawdown. Alright, so entry and exit points. When price revisits an immediate rebalance zone, it often acts as a support or resistance level, providing excellent trade opportunities. So, quick entry strategy. Enter trades at percentage markers within the zone, 50 or 75% levels. So all it is you can either use like 50 or 75% of the immediate rebalance or even order block, and you can just enter a trade once price taps into those levels. Next is you can combine the Fibonacci retracement levels for more precise entries. So if you find an immediate rebalance, you can actually pair it with a Fibonacci retracement level. So just like a quick example would be, let's just say you draw your fib from a low to a high and you're in a bullish trend, and you happen to find an immediate rebalance under the 50% level. So just look for buys under the 50% near that immediate rebalance. Next is wait for price action confirmation at these levels. So I actually have a video on different price action confirmation tools that you can use in my supply and demand series, and I have a bunch of examples that you can use, like candle rejections, my favorite candlestick patterns, etc. Next is exit strategy. So you can target the next significant level like liquidity pools or order blocks, and I actually have something like this in my risk management video, so you can just check that out. And then for demand immediate rebalance, target higher liquidity pools. So if you have a demand zone with that immediate rebalance near it, and that just makes it so much more powerful. So you can actually enter from that level or from that demand zone, and you can target even further areas. Why? Because with that immediate rebalance, it gives price or the trend just that much more power to move towards the intended direction, right? So you can hold your trades for a lot longer. Now, for supply immediate rebalance, again, this is just the same thing, but you would just target lower liquidity pools. Now, advanced technique. When immediate rebalance aligns with order blocks, you can use the 50% level within the order block for an entry with high probability of continuation to the next liquidity pool. Now, I'm also sure that ICT says that if you're using immediate rebalances, he doesn't want you taking partials, right? So if I was you, don't take partials, and I would actually agree with that. Don't take them, just let the trade ride all the way to TP, all right? All right, so risk management with immediate rebalance. The immediate rebalance pattern generates particularly strong market moves, requiring a specific risk management approach. So avoid early profit taking. Unlike other patterns, avoid taking partial profits on immediate rebalance trades, as the market often moves aggressively in one direction. So this is just a quote from ICT. Its sudden one-sided delivery makes early exits sub-optimal. Next, wider stop loss placement. Set wider stop losses outside the immediate rebalance zone to to accommodate the strong momentum and avoid premature exits. So this prevents from being stopped out during normal volatility. So sometimes, guys, price can just mohawk a little bit through the immediate rebalance, and you might accidentally get stopped out. So it's always best to just be safe, right? So here's an example of what I'm talking about. So a way that you can use different stop loss methods is you can either set the stop loss at the 50% of the order block here, right? So if you're trading it with order blocks, you just set it at the 50%, or you can set it right under that order block, which is also safe, if not safer. And as you can see here, once price taps into it, it just moves on up, right? Pretty easy, pretty simple. Now, some risk considerations for immediate rebalance. You can expect rapid, significant moves, position size accordingly. Next is consider trailing stops only after confirmation to maximize gains in strong trends. Now, I actually have a video on trailing your stop loss, so you can actually check that video out and you can pair it up with this as well. Next, risk to reward ratios can be more aggressive due to patterns strength, right? So like I said, you can actually increase your risk to reward just because when there's an immediate rebalance, price tends to respect it very well and tends to immediately move in its intended direction. Now, for an advanced usage, confirmation, avoiding retracement, and multi-time frame analysis. So confirmation tool. Immediate rebalance provides strong validation for other ICT concepts. So you can look for IRs, near order blocks, or even fair value gaps to confirm directional bias. Use as a filter to find only the highest probability setups where multiple ICT concepts align. So when I say looking for like an immediate rebalance near a fair value gap, just think of the fair value gap as like another point of interest that price will react off of, just how it would with an order block. Just same thing, all right? And then next, avoiding retracement trades. The absence of inefficiency means counter trend moves are unlikely. So you put focus only on trend following trades after an IR forms. Next is skip setups that contradict the IR direction to avoid low probability trades, right? Pretty obvious. Lastly, multi-time frame analysis work effectively across multiple time frames for enhanced analysis. So with higher time frames, identify the overall trend direction and then set trading bias, bullish or bearish. And then on the lower time frames, you can refine precise entry points. So on the lower time frames, you can find where you want to enter for an even earlier trade, right? Lastly, optimize risk to reward ratios. So since you're entering on a lower time frame, but you're trading in the context of a higher time frame narrative, you can hold your trades even longer because now you know, okay, on the higher time frame, I know where price is more than likely going to go. And now that I have this immediate rebalance on the lower time frame as well, and I enter off of that lower time frame, I can target higher time frame points of interest like order blocks or liquidity pools, right? It's really, really simple. All right, so I just wanted to give a quick example of what I was talking about earlier here. So you can see that I'm using the USD Mexican peso. So what did price do? Price came down, took out this liquidity. After it took out that liquidity, what did it do? It came up. We did not have an immediate rebalance. So we came up, afterwards rejected off of an area from price here, right? So here, there was something that caused it to keep going down. So if I were to go, for instance, to like the 30 minute, you can see it reacted off of this rejection block. Okay, there we go. So it reacted off of that rejection block. But first, let me go back to the 4 hour real quick because I forgot to mention this. This pair is already bearish, right? So it's fine. It's already bearish. I know for a fact that we're good. And not only that, even after it reacted off of that rejection block, if you go back up to the 4 hour, you can also see that we had a change in state of delivery. So back to that rejection block, right? Price taps into it, comes down, we have a change in state of delivery. So it just confirms with our higher time frame, or both higher time frames, so at the 4 hour and the 30 minute, that we have bearish trend continuation. So real quick, let me just go over it one more time, all right? Because I know I was everywhere. This pair is bearish. We have a bearish trend, right? We mark this low up for a future change in state of delivery. We go down to the 30-minute. Price comes up here, taps into a rejection block, starts going down, and then we have what? That change in state of delivery from our 4-hour higher time frame context. Okay, cool. So now let's go down to the 5-minute. So once we're in the 5-minute, what do we see here? We finally end up spotting an immediate rebalance. This bad boy right here. So as you can see, we have that immediate rebalance. We also pair that up with a supply zone. Why? Because not only does this make it high probability, but it's also near our change in state of delivery, right? This high or lower high formed, price kept coming down, so I highly doubt price is going to come back up to this area here in the 5-minute. Plus, it already filled up whatever inefficiencies were here. And as you can see, price did not even bother going back up. So this makes this area really, really high probability. So now all we have to do is wait for price to react. Look at that perfect reaction. Taps into that immediate rebalance perfectly, rejects off of it, and what do we see here? Price is going down. All right, and since, like I said, since we're reacting off of immediate rebalances, you can hold these trades for a lot longer, right? So, and yes guys, I cherry picked this example, obviously, you know that I'm honest with you guys. You know I'm honest with y'all. So here you can see this was held for an 11.98R. Real nice and smooth trade. Now that's just one example and one of the many ways that you can use immediate rebalances, but I just wanted to show you guys real quick what it is that I was talking about. All right, so further advanced strategies. So integrate with liquidity pools. Pair immediate rebalances with liquidity pools, equal highs/lows, to anticipate price targets. Look for bearish rebalances targeting sell side liquidity below equal lows. Now, if you don't know what any of the terms that I've been using mean, you have to watch my first ICT video that I made, and then from there move on up, because I'm not gonna dumb it down all the way because it's gonna be too long of a video, right? But if you do understand what I'm saying, then don't worry, let's just keep going. Next, recognize failed patterns as reversal signals. So a failed immediate rebalance, which could be no extension candles or no confirmation candles, or even the immediate rebalance being tapped into and then price breaking through it, that can also signal a weakening trend and potential reversal. Consider exiting trend trades or preparing for counter trend trades, or not even entering a trade at all, right? So if you see that an immediate rebalance leveled or resistance does not hold, then don't enter trades for that day or session, okay? Next, trade key session times, New York /silver bullet. This is just an example, right? So focus on key trading sessions like 10 to 11 a.m. or 2 to 3 p.m. New York time, where immediate rebalances often align with algorithmic activity. Silver bullet hours are primed for these patterns. Now, I have an example here. As you can see, I have a silver bullet entry. So what did price do? Price created an immediate rebalance, right? And yes, you can use opposite candles to form the immediate rebalance. You just want to have the same type of candles after the immediate rebalance has formed. So again, this is during the silver bullet hours. I have a fair value gap, and the third candle here taps into that fair value gap, after which I have another candle that creates that immediate rebalance. Once that candle closes bearish, I enter on that bearish candle, and then I target some liquidity, and as you can see, price ended up hitting TP, right? It's really that simple. Next, you can also pyramid entries on lower time frames. So add to positions as price retests the immediate rebalance zone on lower time frames. Scale in with smaller positions targeting rapid moves post confirmation. So in this example here, now let's just say I have a unicorn model, right? This is the 5-minute time frame. Don't get distracted by this. So we have a unicorn model, right? So we mark out that 5-minute high, price taps into that breaker block and fair value gap. So I'm obviously going to target this 5-minute high. So once price taps into my limit order, right, I'm tapped in, stop loss under here or under this candle's low right here. I go into the lower time frame, which would be the 1 minute, and then I look for another immediate rebalance, right? Because I already know that price is going to tap into that 5-minute high. So as you can see, price is going up, it's going up. I see another immediate rebalance. I wait for that candle to close, enter on that candle closure, set my stop loss just under here, and what does price do? Tap into that 5-minute high. So I literally entered two positions, one on the 5-minute time frame, right, where price tapped into my limit order. I scaled down to the 1 minute, waited for another immediate rebalance, and as you can see, I entered once that candle closed, targeted that 5-minute high. Easy freaking money. Now lastly, use within broader market narrative. Apply the immediate rebalance within the market's broader story. Align pattern signals with the current market environment. All right, so if you see that the overall market is bearish, you want to see bearish immediate rebalances. If you're seeing all types of rebalances, I would wait for another trading session or look into another pair or just wait another day, whatever it is that you use to manage, the days or whatever. Just make sure that you are applying this type of concept with the overall market structure, guys. Okay, if you're seeing that overall market structure is bullish, make sure you're entering with immediate rebalances that are bullish, right? Just make sure you're using all these other types of concepts that ICT has shown and that I've shown you to try to make strategies, try to make a bias, right? You don't just want to use this by itself, even though it's pretty good. I would highly suggest you just pair it up with a bunch of other different things. Backtest it, right? I have links down below to different backtesting softwares you can use. You can also ask me questions on this kind of stuff. You can leave comments, you can join the Discord, whatever the case may be, guys. I'm always ready to help, all right? Now, for the final section, practical steps and conclusion. Implementation steps. So number 1, chart setup. Set charts to New York local time, UTC-4 during DST. Use candlestick charts across multiple time frames. Number 2, pattern recognition. Identify the 3 candle setup where the third candle fills the gap by touching the first candle's wick. Confirm with 2 extension candles. Again, this is optional. Number 3, context and execution. Align with higher time frame trends and order blocks. Enter at key levels within the zone and set stops outside the zone. And number 4, review and learn. Backtest historical patterns to build confidence. Journal your trades with some positive self-talk to reinforce learning. And conclusion, the immediate rebalance is a cornerstone of ICT trading, offering a window into smart money behavior and trend strength. By mastering its formation, characteristics, and applications, you can enhance your trading position and profitability. This concept provides traders with a powerful tool to identify high probability trend continuations and align with institutional order flow. And this is just from ICT here. Success lies in understanding the market's narrative and aligning your strategy accordingly. Let the immediate rebalance guide your path to consistent trading mastery. Alright, so thank you guys for watching this video. I really appreciate you spending your time with me. And as always, don't forget to join the Discord. You can email me, you can find me on Twitter, you can find me on Instagram. Leave your comments down below, join the Discord. And if you want to backtest this, you can use TradingView, you can use Traders Casa, you can use FX Replay. I have all of that in the description down below. And if you also want to have some one-on-one sessions with me, I also offer those too. You can find that in the links in the description below. It's only like 15 bucks for 15 minutes. And as always, I leave you with some biblical wisdom. This is from Proverbs 21:5. The thoughts of the diligent lead surely to abundance, but all the hasty are only for loss. So, thank you guys for watching. Don't strive for perfection, guys. Strive for progress. And with that being said, I'll see you all in the next one. Peace.